Something magical happened in July 2020. The Federal Reserve, with Jerome Powell at the head, threw a crazy party. They printed a massive $4.5 trillion, and a lot of that money made its way into the stock market, and them stonks went to the moon. It was glorious. Unfortunately for all the degenerates, the steamy checks also caused a bunch of inflation. They decided to pump up the brakes and stop the printer. They actually went from zero rates to the fastest rate hike in history in about 8 months. So instead of reducing the balance sheet like typically it would happen, they increased rates from 0 to 4%, which caused a bunch of institutions to put their money on the reverse repo market, which is essentially like a short-term bond. And that in itself reduced the net liquidity that all you degenerate gamblers had to pump stonks and crypto. As everybody knows, that caused a massive market crash, especially in tech stocks, crypto, and just risky assets in general. So everybody had to go back to working at McDonald's and no more Lambos. So even though we had a great CPI report 2 days ago and we've had 2 sessions of stocks going up, we know that on Monday Jerome Powell is gonna wake up, he's gonna see the market green, and because he's a very macho man, he's gonna tank the market again. So I want to discuss a hedge that I almost missed, and I'm pretty sure everybody has missed at this point in time, that will protect you against more interest rate hikes to some degree. Now when I talk about interest rates hedge, what I mean is as rates hikes go up, I want an investment, a company, a stock, some sort of thing that goes up in value or prints huge amounts of cash flows, proportionally or even more than the interest rates. So what I want to do is offset the loss caused by the lack of liquidity that goes out the market. So you might be thinking perhaps banks. Of course, banks make a lot of money on people's deposits because their interest rate revenues just explode. But the thing about banks is they lose a lot of money on the other side. For example, there's no IPOs when the market is down and interest rates are up. So some sections of their business completely dry up. Another issue is that banks, for example, they have reached their maturity in the business. They just have very little potential to gain market share and grow any further. So what is this hedge that I'm talking about? Well, it's Robinhood. And before you click off the video and call me crazy, call me names, hear me out. I want to go over some facts that we learned a week ago in Q3 results that make Robinhood's one of the best interest rates hedges that I've ever seen in my life. Now, if you look at Robinhood's market cap, you'll notice that it's almost entirely made up of cash. But just having a lot of cash compared to enterprise value in itself doesn't really make you a good investment. But just have that in mind, we'll come to that later. Now notice what happened in their last quarter report, which as I said was a week ago. Their interest rates revenue just exploded. Since they had so much capital and interest rates went up so much, thanks to the Fed, thanks Jerome, they put a lot of that cash into a reverse repo that we talked about, into money market accounts. And of course, this wouldn't have made much of a difference for another company, but since their market cap ratio to cash was so low already, it became very, very significant. And this took a lot of people by surprise, me included. In fact, they posted their first profitable quarter since, you guys remember the GME and AMC craziness last year? But for Robinhood, their adjusted profit is very similar to their free cash flow because they take off a lot of their non-cash expenses like stock-based comp and things like that. You can see their bank balance went up by $200 million, and you can see how that creates a little bit of a loop. So cash goes up and then interest rates go up thanks to Jerome, and then that increases the net revenue and interest, and that increases the cash balance again, and the whole circle continues again and again and again. And you might be wondering, how did nobody realize this? Well, to be honest, some people did. If you notice, after Q3, the stock actually went up a lot. So it popped to $12, but thankfully the FTX bust just happened and that crashed the stock like 20%. Because as you know, FTX has a stake in Robinhood, and now people expect them that they're gonna have to sell it, which probably they will. But that does not affect Robinhood in any way. Of course, you could argue what happens when interest rates come back down. Well, luckily for Robinhood, if interest rates go down, obviously interest net revenue will go down, but the trading revenue will go up because all of you degenerate gamblers and all the degenerate gamblers that are not even in the platform are going to come back up, and their trading revenue is going to come back up. So they're going to make more money selling their order flows. Thanks to FTX and their ineptitude, we have a chance to get Robinhood at a 20% discount, which wouldn't necessarily make any sense otherwise. This company just got profitable and nobody knows, and they're making a killing on interest rates. Not only that, because their cash is so high, that interest rate revenue just becomes very, very significant in terms of profits. So it becomes a vicious circle of Jerome Powell increasing rates, Robinhood making more money, and then making more interest rates revenue as a consequence of that. And that, my friends, is what we call a hedge against interest rates. The more he pumps interest rates, the more net profit Robinhood makes. But this wouldn't work in any other company because their cash to market cap is not that high. It's not going to become a relevant enough part of revenue to actually make any meaningful difference in terms of their net profit or their cash flows. Of course, I could be wrong. I'm just some dude in the internet. This is not financial advice. But if you like in-depth review about tech companies as opposed to all the surface level commentary that you see all over YouTube, please consider subscribing, and I'll see you guys next time.